Hi guys, so today we'll be talking about how to trade using moving averages, and we will use examples of Bitcoin, Ethereum, and Litecoin. So today is October 28th, 11:04 p.m. where I am, so it's 11:04 Eastern Time, and yeah, we we start right away. Yeah, so let's look at Bitcoin first. Okay, so let's look at Bitcoin full screen. Yes. So Bitcoin is at $13,063.46. It's down 4.7 today. Yeah. Yes. Today. Is this correct? Yes. Look at a sharp downtrend. Now, in order to understand this better, let's include the Bollinger Bands, although we'll not talk about that because this is not a concern of our video. Let's now use the moving averages. Now, in order to put out your moving averages, we choose a large enough number. If it's a daily movement, usually we see 200 day. 200 day really is something arbitrary. I saw that in past books, we have different values for this. You can even put it at 197, 195, 205, 300, depending really on you. So usually 200 because 200 corresponds to 40 weeks of average. Yeah, 40 weeks. It can be 50 weeks, so 50 times 5 is 250, so you can use that. We can use simple or exponential. Really depends on you. Now the colors will be important later on. So let's just put 200 period average, and it's violet. So this is the one. So what does that mean? What does moving average of 200 period means? It means that if you add the past 200 days, this is the average, right? So this is what we call a long-term average. So right now the long-term average is at 10,067. So what does it mean if the price is at 13? The moving average of 200 is at 10,000. So this only means that the price is above the moving average, and therefore it's bullish in the long term. Bullish means it's on an uptrend, right? Now, if you look at it from a longer term perspective, like look at it from a 1 year perspective, there are times when the prices are below the moving average. So these are the times when that happens. Now, if you believe so much in Bitcoin, and that eventually it will go up, then these are the times when it would have been so profitable to invest in Bitcoin. Right? So that's a 1 day average. And now let's include another, which would be the intermediate term. So usually the intermediate term is, of course, in the middle of the short term and the long term. Now, based on books that I've read in the past, usually the short term is at around 25 days. 25 days means 5 weeks. So remember, 40 weeks, and then the short term is 5 weeks. But then we are also considering the fact that we are using Bollinger Bands, and Bollinger Bands has the median. Let's go with that. The median of the Bollinger Bands is at 50. This curve right here, this line, is at 50-day average. Okay, so if we know that for a fact, let's look at the Bollinger Bands again. Bollinger Bands, okay, period is 20. So yeah, sorry, it's a 20-day average. So if this is 20, okay, and this is 200, so you can pick a number. So 20 is okay, right? 20 is okay because it used to be at 25. So 20 and 200, you can pick a number in between. So in the past, I saw 75 as an intermediate term. So 75 is about 15 weeks average. So we have 4 weeks, in this case 4 weeks average, we have 15 weeks, and we have 40 weeks average. So again, I saw intermediate terms run as low as 63, 67, or maybe 95. So it really depends on us. But for this example, we'll be using the usual thing, which is around 75. 75, and we make it green. Okay, green. Where's the green? All right. So this is the one. So again, if the long term is simple average, then everything should be simple. So if you will look at this from that perspective, 6 months view, yeah, or 3 months view, you will see that the price is indeed above the short term above the intermediate term above the long term. So this formation is a bullish formation. So it means that up to this time, we are still in the bullish trend, because the price is above the short term is above the intermediate term is above the long term. Now there are certain areas or certain times when there are crossovers happening here and there. Like example, a crossover is when the moving average touches and then crossovers, from the top to bottom or bottom to the top. So those times, those are commonly held to be signals of market turns. So in this case, at this point, sometime in October 19, this can signal a market reversal or a market shift. So from this is a downtrend because the short term, which is the 20-day, is below the intermediate term. Yeah, so this is some bearish sentiment happening here because the price is below the short term is below the intermediate term. So we can say that this area is considered to be short term in the bearish on the short term, but then still bullish on the long term, because the long term average is still below everything else. So we are still above the long term average. So that is the reason why you put this at a very large number, so that you will know that in the long term it's still bullish, but then in the short term it's not good. So this crossover can be a bearish crossover, but this is an intermediate term only, right? So this happened, but then after some time the short term again moved past the intermediate term, and the crossover is a bullish crossover because it's an uptrend. And we noticed that the price was the first one to cross over. The price is the first one that crossed over the intermediate term. Of course, it crosses over first the short term and then the intermediate term. Okay, at this point it is already bullish. We know that it's bullish because we can see it. But then this is the confirmatory crossover in October 19, when the price went up above the short term and the short term went up above the intermediate term. So this is a perfect bullish trend at this point, and then you can also analyze that with respect to other indicators. Yeah. So at this point in time, if we just look at the moving average, the Bitcoin BTC has a long red candle. This can signal a reversal, but using moving average, because it is we are using large numbers, so usually moving averages will not be able to detect sharp reversals like this. If this continues down, then you will wait for several days before it registers a market reversal. So that when you look at moving averages, usually it's involved in swing trading, but in the long term. And again, Bitcoin may not be the proper commodity for it, or the proper shares or item to trade it with. So you can choose either stocks, because the stocks would have larger swings than the forex and the Bitcoin and cryptocurrencies. So again, if you look at this, there's a huge long red candle which can continue to go down, because we saw that green candle pierced the upper band of Bollinger, and now it was followed by a long red candle. But then we are not using Bollinger and Japanese candles here. We're just using moving averages. So at this point in time, the price is still above the short term is still above the intermediate term, and the intermediate term is still above the long term. So while we have a sell-off today, we can still say that Bitcoin is still bullish in the short term, the intermediate term, and the long term. Yeah, so that's how it is. Now let's look at other currencies. Okay, let's look at Ethereum. Ethereum is green. Okay, just the same. What we did with Bitcoin, we will again do it here. Again, focusing only on the moving averages. We see here the price above the short term above the intermediate term above the long term. So we can still say that Ethereum is bullish. Okay, but let's look at the final candle today. The candle today, of course, we are still starting today in the US. So we have a green candle, but the green candle is now touching the short-term average. So depending on this green candle, if this pierces the moving average downwards, so we can see that there will be a reversal or a crossover, at least for the short term. Because if the short-term average begins to turn down, and usually what happens is that Ethereum follows the trend of the Bitcoin. So if this goes down, then what will happen is that the price of Ethereum will go down, followed by the short term. And when the crossover of the short term and the intermediate term happens, then that could be a sign of weakness in the short term and intermediate term, and then it will continue to go down. Of course, you cannot or you should not buy an issue or shares or a share if it is a confirmed bearish, if it is in a confirmed bearish sentiment. Well, a bearish sentiment or a bearish trend would be the long term above the intermediate term above the short term, and the short term above the price. So here, it's not yet the case. Okay, let's look at another one, which is the Litecoin. We have not included Litecoin in any of our analysis in the past. So LTC versus USD. LTC is at 56.16 today. Okay. So again, just focusing on the moving average. Litecoin the price is above the intermediate term and the short term. There's a brief crossover happening with the short term and intermediate term. The short term is crossing the intermediate term for the first time in more than 1 month, because the last time it crossed over, it was a crossover on the bearish side. So this was the one. So we have the price below the price even went below the 200-day average. So this is a confirmed bearish sentiment. And also the short term crossed the intermediate term on the way down. So this time area of the Litecoin, this is bearish. But then after, so started in September 16, the next crossover is happening as we speak. Yeah, today we will have the short term crossing over the intermediate term today on the bullish side. Although we can see some weakness on the price, so that's how it's going to be. Now the long term is still below the intermediate term. So again, the long term seems to be bullish. Short term bullish or almost bullish, depending on the crossover. But then the price is showing some signs of weakness, so we have to be careful so that we will be clear about our movements. Yeah. So that's it. That's how to That's what I do in order to look at the trading options, especially when trading cryptocurrencies and forex pairs. I usually do this. Look at the moving averages first, and then try to use it, considering the placement of the price in the Bollinger, and then later on decide based on RSI, MACD, and ADX. Yeah, but moving average is quite helpful. Even without the others, if you're just using swing trading or small risk investment, then using the moving averages will greatly lessen your risk, the volatility risk. Yeah, so that's it. Thank you very much. Bye bye now.